Hey traders, welcome back to the channel. In this video, we're going to talk about Apple stock, ticker symbol AAPL. Now, this is obviously one of the most well-known companies and most traded stocks in the world. And it had a huge week, hitting all-time highs and setting new highs, including on Friday, closing another all-time high. And many are believing that this thing is just going to continue to go, all the way to $200, setting, a new market cap record in excess of $3 trillion. And it is very, very possible. Okay. Right now, the outlook on Apple is extremely bullish. And I believe fully that, this stock can continue to go to that upside. So I'm going to break down kind of the reasoning behind that and then go into the charts and explain how to best play this both short term, long term, taking a look at key levels, key indicators, and more, so we know how to best play it moving forward. So without any further ado, leave a thumbs up on the video, subscribe to the channel if you haven't already, and let's get started. So let's start off by just doing a little bit of DD into, this bullish run behind Apple, why it's seen this huge move over the last couple of months. Great article here released by the Motley Fool this week, kind of going over the key points from financial analysts Daniel Ives and Katie Huberty, explaining, their $200 price targets for Apple and kind of just summarizing a lot of their points and why there is all this bullish momentum behind Apple. So you can see we have some quick summaries here of what the analysts had to say. Daniel Ives claiming, this is well documented information that global demand for the iPhone 13 is outstripping supply by about 10 million units. This is something that has, actually created a little bit of fuel for the Apple bears, saying that they are having some supply chain problems. However, this definitely seems to be kind of a temporary problem. And ultimately, it just kind of goes to show the health of the company. And on top of that, Huberty added that, the price of Apple currently doesn't even factor in some of the projects that we are going to be seeing released very soon, including some of their developments in the AR field, the VR field, as well as getting into vehicle related projects. So both very, very good points, kind of very, very good theses for why they are bullish on Apple. But now let's kind of get into the details here. So, first 3 points kind of all go hand in hand why Apple is a bullish investment right now. Their staple product obviously has a huge loyalty rate. Everyone and their mother has an iPhone. This isn't something that's going to change anytime soon. It's like kind of the most important piece of technology that we all own. And so that's obviously a big factor for why this company is going to remain healthy for a long time. Similarly, we see the 745 million paid subscriber number, and kind of a little bit more fundamentally, you see just how well they're doing on a fundamental perspective. $191 billion in cash and equivalents. Obviously, the health of the company is in, no jeopardy. It won't be in jeopardy for any time moving forward. They have plenty of money to continue to expand, develop new products, and expand into new industries. So all of this clearly kind of bullish reasons to believe in the company. Point number 4 is kind of a more interesting question, debate, and kind of personal reason for why I believe that there should be a bullish outlook on Apple. Inflation is kind of a big topic of debate in today's markets, especially among large caps and, the big indexes. As you can see, SPY's approaching all-time highs, and a big reason for that is inflation. Apple is well insulated from inflation. The way that they run their business, just how large they are, allows them to kind of escape the business impacts of inflation that are oftentimes considered to be negative. They don't really have to worry about this. And with rising inflation, while the products that they release are also going to continue to go up, that's more money in their system while they don't have to really deal with rising costs. That's ultimately kind of a bullish outlook moving forward, as this is a problem that really isn't going to go away anytime soon. Maybe in the next couple of years, the Fed is finally going to get our interest rates, down to their target levels. But for now, this is a problem, but this is a problem that actually goes to benefit Apple. And finally, the fifth reason being that there was $86 billion in buybacks of the stock over the last fiscal year. That is huge. That they took back nearly 4% of their float, making each share worth significantly more. It also shows that Apple obviously believes in the strength of their own company moving forward with those buybacks. So that is another bullish reason to be behind Apple. The only kind of drawback to buying Apple right now that this article points out, something I totally agree with, is that Apple's upside is limited at this moment. Okay, we've already seen a huge run up here in the last couple of months. Realistically, it definitely still has some room to run, but going over that $200 level, going far beyond that, it's hard to kind of justify that kind of valuation for the company at this current moment. Now, yes, they are, continuing to expand kind of the different sectors they're in and whatnot. So in the future, definitely could see, reason for why this company should continue to go higher and higher, and its valuation will be justified with a stock price well over $200. Just at the current moment, that upside is a little bit limited, especially after this huge run that we've seen. So with all that being said, now let's hop into the charts. As you guys can see, just a huge week for Apple. Every day just going further and further to the upside, setting new all-time highs. And obviously Friday, very, very strong close right near that $180 level. But we're going to dive into the support zones. Now, this is a little bit different than kind of my support zones with other videos that I do, in the sense that, this is it's a large cap stock. So the support levels and the strategies here that I'm going to lay out, they're going to be a little bit different. I'm going to lay out both, short-term strategies, midterm strategies, and also long-term strategies. So whether you're looking to day trade it or short-term swing it, I'm going to lay out some short-term support levels you can look at. I'm also going to lay out levels if you are looking for a swing trade, and also kind of to get in long-term for an investment. So starting with those short-term levels, we're going to see a lot of support zones that were kind of established this week. Don't really have a lot of data to back it up, but kind of in this mid 170s level, 177.9 being the highest. And then we have a zone at 177.4 to 177. Below that, we have 176.70, 176.30, 175.90. A little bit of a drop off after that. Opens up a little bit more down here. 175.25 and 174.60, 174 are those three bottom levels here. There's going to be a little bit more volatility if we do indeed go below that 175.90 level that you guys need to watch out for. So keep those levels in mind if you are indeed looking to day trade it. Really, any of these dips are good buy zones if you are bullish short term on the stock. Believe that it's going to go back up. Like I always say, with support levels, you should always try to target support levels if you are going to buy a position or add to your position. By doing so, you minimize your risk and maximize your upside. If that 174 level can't hold, however, short term, as far as, day trading goes or a short swing trade goes, we could kind of start to see this look a little bit more bearish. And that's kind of where you go more into looking for entries for a swing trade with some of these next support levels we're going to talk about, specifically the ones, in this 160, 950 to 171.50 range. These are good kind of ads, in my opinion, for a shorter to medium term swing trade on this stock. This is kind of where the all-time highs were sitting before this week's run. We saw that we got to these levels back in the beginning of December, but then saw a pretty big pullback here kind of with the market. Before this week, we kind of just went on an absolute rampage. So I believe that, this is going to be a good level to retest. And if it does hold, well, then, for kind of a medium term swing trade, these are going to be pretty good levels to add at. So we have support levels here at 171.50, 170.50, 170, and 169. 169.50 rather. All of those are going to be good zones to kind of accumulate that short-term or midterm swing position if that is what you're interested in doing. Just kind of scaling into those support zones would be key. And you'd want to definitely see it kind of hold that 169.50 level, because below that, there is more downside ahead if it cannot hold. And that's kind of where you're going to start to seek entry for more of a longer term trade if that is what you're looking to do. So with those levels, we have our first level at 167.50, 166.50, 165, 164, 162.50, and then 161, 160, 159, and big level here at 156.25. Obviously, a lot of range on those levels. It's kind of up to you to determine your strategy as far as that goes, and what dips you would ideally want to scale into. Depending on whether you have kind of a more aggressive strategy or a more conservative strategy, you definitely want to see it hold this 156.25 level. That's kind of our lowest point in recent memory ever since we kind of started this run in middle of November. If it does break below this point, well, all of a sudden, at least for the time being, the chart is definitely going to turn a little bit more bearish. And you're going to kind of want to wait for a new base to form before hopping into the stock. But that's all I got as far as the different types of support zones that you should be looking at, depending on kind of what your trading or investing strategy is. Now going into resistance zones. Our first zone that we're going to be looking at is 180. Then we got 190. And then we got, of course, big one here, big psychological resistance level at $200. This obviously is a lot less clear, a lot less filled than our support zones. The reason being is pretty obvious. As we can see, Apple is at all-time highs. There's no established kind of chart patterns or data that can really back up any new resistance zones at these levels. Yes, you can kind of get into Fibonacci's and whatnot, but that's not how I trade. So I'm not going to go over that pretending, that I use that strategy or pretending to understand it. I kind of just go off of, key psychological levels, and then I just wait for, stocks to get into these levels and then show me what the actual resistance ranges are. However, as you guys can see, I do have these three marked out. Those are always going to be psychological levels that the stock needs to get above if, it wants to continue to move up. As far as our moving averages and indicators go, Apple obviously closing at all-time highs means that it is currently sitting above all its short-term, medium-term, and long-term moving averages. That all is very, very bullish, both short-term, medium-term, and long-term. We can see that the 9-day EMA sits at 170.26. The 21-day EMA sits at 163.76. The 50-day moving average sits at 153.16. And the 200-day sits all the way down at $140.33. All of those, like I said, bullish indicators. And I did tell you guys that, if it does go below $156.25, I would be waiting before entering. But that being said, the medium to long-term outlook would still remain bullish on the stock as long as it is above, that 50-day moving average and especially that 200-day moving average. So that's what I got as far as the moving averages go. Now let's hop into our RSI and MACD. We're going to actually have kind of some more bearish indicators as far as that goes. The reason being is just, this has been running nonstop. As you can see here on the daily, RSI approaching that 80 level, very overbought at the moment. That's kind of why, I spent a lot more time focusing on support levels rather than focusing on resistance levels. This thing is in desperate need for kind of some consolidation to cool down a bit. Stocks can't just go up and up and up. Eventually, the buyers do get exhausted. The sellers come in. So ideally, you would kind of like to see that and see it go down. You've seen that every time in recent memory where Apple has approached these levels. there normally is some sort of larger pullback and consolidation. So definitely keep that in mind. These patterns tend to repeat themselves. And just confirming that, looking at the MACD, you can kind of see a similar story being painted here. Right now, this stock is very overbought. It is in desperate need to kind of cool down. But all that being said, nevertheless, both short term and long term, I do still believe that the outlook is bullish. I think kind of, the chart shows that. I think, all the DD and what all the analysts that are, much smarter than me, what they're all saying makes a lot of sense. And so, I'm very excited to play this stock and see what it does moving forward. And I'm also excited to hear your guys' feedback. So, let me know what you think is going to happen next week, what your strategy is. Always interested to hear it. And if you have any questions for me, definitely let me know. You can drop a comment below on this video or hit me up on Twitter. Happy to answer any questions that y'all have. If you like this video, hit me with a thumbs up. If you want to see more content like this, please subscribe to the channel. And aside from that, have a great rest of your night.